Hello and welcome everybody. SF Live episode number 97 this morning. Thanks for joining us. My name is Kai Hoffmann. I'm the CEO of the Soar Financial Group. In a few short seconds, I'll be joined by Stephen Dean. He's chairman and CEO of Artemis Gold, and we'll be talking about their Blackwater. Why did I just get stuck? Blackwater acquisition. I thought it was Backwater for some reason in a second. And we are live here. So my point is, use our hashtag AskARTG, that's the company's ticker on the Venture Exchange, for your questions during this live conversation with Stephen. And we'll get to those questions at the end of our chat with Stephen. And we'll try to squeeze them all in and get your questions answered as well. Now, make sure to follow us. Also, to follow us on YouTube, follow us on Twitter, hit the alert button, hit the subscribe button. That way you get notified when we go live with another update. Really appreciate that as well. Now, let me switch over to Mr. Stephen Dean. And I've been after you, Stephen, for a while now. Ever since you announced in June the acquisition of Blackwater from Newgold, I've been trying to get you on the program. I really appreciate you joining us this morning. I hope all is well. How are you? Yeah, it's been a while. I was like, we saw or bumped into each other a couple times, I think, here in downtown, intermittently between coffee meetings, but haven't had a real conversation since pretty much the COVID, or like, was it even? I don't think we saw each other at BMO, so it's been a while. So. And before we get started, before we dive more into the details, the acquisition details and everything, run us through Artemis like in 30 seconds, real quick.
Out of Atlantic just prior to the sale to St. Barbara in the summer of last year. And we listed on the TSX.v in October 2nd of last year, to be precise. And we raised a little bit of cash, but always we're very focused, as we were right from the outset, on finding and acquiring a scale asset that we could apply the skills and experience of our team.
Fantastic. And I'm glad I actually have you on, because I'm really curious about the art of the deal behind it as well. You said you spun out Artemis, obviously, out of Atlantic Gold back then. But like, what made you stay in the market? Let's start with you personally. Like, you've had a huge win with Atlantic. You sold it for over 800 million Canadian. You were a big shareholder at the time as well. Why did you come back? Why did you feel the need to continue with Artemis now?
Well, some would say I'm a serial entrepreneur in some respects, but Artemis will be my fourth gold company that I've either founded or co-founded. I took a 10-year sabbatical in my 40s, so I still feel like I've got a lot of energy and a lot to contribute to the sector and the industry, and I love it. I love this business, when we built Atlantic, and then subsequently sold it, as you pointed out, honestly, I thought that there would be a whole bunch of copycats who were going to apply the same discipline, the same differentiators, the same playbook that we applied in the industry, which are very distinctive, and you're aware of those. We can talk about those in a moment, but I honestly thought that people would compete with us with the same playbook, and turns out nobody did. And so that was the other reason why I just said, look, if there's an opportunity to apply the same discipline and the same business approach, then we can create some more value. And that was the beauty of the Blackwater asset, is it's 10 to 20 times bigger than the asset we started with at Atlantic, the Moose River consolidated operation. And so what that means is that we have the opportunity to create 10 to 20 times more value potentially.
Interesting. Yeah, good point, actually. I meant to ask you as a follow-up there as well. Like, Blackwater is way bigger, is way later stage than Atlantic was when you started it. So what attracted you to the characteristics of the project? Like, what made you pick it? And run us through this, like, as I said before, the art of the deal. Like, how did the deal come together?
Sure. Well, firstly, there are not that many, regardless of scale, actually, not that many quality gold development properties around the world. And then when you apply some filters, and these are the filters that we apply for Artemis, but frankly, it was also for Atlantic, filters like good jurisdiction, good mining jurisdiction, Nova Scotia, Canada, British Columbia, Canada, Australia, US, and countries where there is an established acceptance and transparency around mining. That was one filter. The other filter was an asset which has the important environmental and social licenses to commence construction. We've got a team, it's essentially the old Atlantic team, ready to go to apply those same skills and disciplines and experience to building something new. And so to spend 5 or 10 years in feasibility and engineering and more importantly in the permitting and social licensing phase was not going to optimize the value of our team. So the second filter was something that needed to have environmental and social license. And for that matter, it's curious to me that the market does not differentiate in the capital markets do not differentiate between properties that have the EA approvals and those who don't, which for me is madness, because we certainly do as industry insiders. That is so important, because I think particularly post-COVID, if we ever get post-COVID, it's going to get harder and harder to find those properties and get those licenses for social and environmental acceptance.
But why hasn't Blackwater been taken out sooner out of Newgold, or even been developed sooner? You said like it's got some environmental permits already in place. Like you're just going through like the construction permits more or less. But you have a really good standing with the local First Nations. Other environmental assessments have been granted. Like why hasn't this been developed sooner? Like what was the main impediment? Like why has it been sitting in Newgold's like shelf for as long as it did?
Yeah, well, perhaps the right place for that question is Newgold and not me. I can speculate. I know Renaud Adams, who is the CEO of Newgold, the new CEO of Newgold, and I knew him well during the period where he was building his previous company called Richemont, and we were building Atlantic at the same time. So we would get together over beers in conferences and things. And so we had a good respect for each other's skills and experience. And it was really as a result of that, he and I started discussing the possibility of us acquiring the Blackwater asset from him. I think he felt constrained, firstly, by the fact that he needed to focus, and his board wanted him to focus on getting Rainy River right, their other major asset. They've got some capital spends at both Rainy River and Afton, New Afton, which is their other big asset that need to get through over the next couple of years. And frankly, they had some 800 million plus of debt that constrained their balance sheet. So all of those things meant that they probably internally did not have the license to develop this. Having said that, the environmental approvals that you talked about that they had were only achieved about a year ago, in fact, June of 2019. So those approvals were fresh off and new when we started a discussion about us acquiring it.
Interesting. Yeah. So it's more Newgold balance sheet problems actually that led to the sale of Blackwater than maybe other impediments that the project wasn't feasible or anything like that. And we're going to come to the project economics in a second, because you put out a pre-feasibility study just in August with a more staged approach. But runners,
and just to continue on that point, and this is what underlines, I think, the transaction that we did. Newgold acquired the property by taking over two companies in 2011 for a total consideration of around 700 million Canadian.
Okay.
And then on top of that, they spent, since their acquisition all the way through to when we sold it, US $290 million on furthering the asset, getting those environmental approvals, getting engineering, metallurgical test work, geological drilling, the resource off, et cetera, et cetera. So the cost base to them of this asset is north of 1 billion Canadian dollars. So for us to acquire it for what we did, being the cash up front, which helped them, I think, refinance their balance sheet not long after. And the thing that made the deal possible for them, or for Renault, was that we were prepared to offer them a participation in the form of this gold stream. And that was the piece that he was always looking for as part of a transaction that would make sense for him.
Yeah, it's like I got the deal terms actually printed out of me, like out in front of me, and just wanted to go through them real quick. Like total consideration reads like $210 million cash, some 9.9% shares in the company, and you mentioned the stream, and one of the questions I have, obviously, it's an 8% stream, so that seems fairly high, obviously, especially when you're just about to build the mine, not an existing operation. What made you to give that away? Because it's a fairly, looking at your production. Timeline, it's a fairly short term stream on it. Like, run us through the idea behind it.
Well, I think the opposite, actually, Kai. I think that it's an outstanding transaction for us because it's effectively vendor financing the part of the acquisition cost for a fairly modest 8%, and the 8% is capped at 279,000 ounces, right?
Yeah,
So out of a resource of 12 million ounces,
yeah,
to have that piece capped at 279,000 ounces, and then thereafter it fall to the lower 4%, I think makes it an outstanding transaction.
yeah. That's
And
what I
it's
meant by
good.
short term. So
Yeah, it's good for him, but very good for us, and enables this thing to get into production. Or firstly our ownership, and then enables us to take it into production.
yeah. So you paid the first 140 million. That's all paid for. It's been sent. The money has been sent to Newgold. You have a second payment coming up later next year, and that's August next year, of course, of $70 million. You're sitting at 50 million cash.
Yeah.
I want you to run us through a bit through the budget and your planning for the next 12 months as well, just to give us an idea. Like, what are we looking at? I know you're financially very capable of raising the money, but sort of run us through your budgets and plans and expenditures for the next year.
Yeah. We've got 58 million cash in the treasury. So that's a strong position to start with. We do have some work to be done, mostly desktop work, but some drilling. We're going to do some grade control drilling starting later this week, to de-risk further the deposit. So we've got some expenditures to incur, but you're right. In August of 2021, we need to pay the balance of 50 million Canadian to Newgold. We have, as I said, 58 million cash on the balance sheet, and then in addition to that, there's about 33 million warrants that are out, that are exercisable at about $1. That's potentially a source of 30 odd million dollars on top of that. So I think we're in pretty good shape all around. And then of course there's always the option, if we need to raise some more money, with support of us as board of management, down the track, whether that be in 12 months or 18 months time when we do the construction financing.
Fantastic. Let's just clarify on the warrants. Like, 33 million warrants sounds a lot at $1. You're trading at $5. First reaction as a retail investor is, of course, those warrants are going to hit the market. But knowing your the shareholder structure behind the company, that is not very likely to happen. But just run us through the shareholder structure real quick. That was my main point.
Sure. Yeah. And those warrants are mostly held by founders of the company. We're unlikely to be sellers.
Yeah, no, that's what I mean. Like, if founders and insiders hold roughly 42%, if I'm not mistaken. So,
Yeah.
There's
But all those warrants, I mean, we the founders, and a couple of large institutional owners own most of those warrants.
fantastic. The drilling budget. Like, one thing I want to talk about is like the drilling budget. Like, of the $58 million, how much is earmarked for additional exploration and drilling?
It's contingent, of course, but it'll be somewhere between $3.5 and $4.5 million.
Oh, that's okay. That's not much, and that'll get you to the PFS, like, sort of level. Anything else you need to do to get to the PFS stage to get the study finalized?
We've got some engineering. We've got some geotech drilling. Most of the field work, other than those aspects, is done. And that's the advantage of that we also have, is that there's been so much engineering and so much work and data on this deposit, and we're reaping the benefit of that.
Yeah, and I said PFS, I meant feasibility, because you're about to engage also EPCM contractor, or at least you're starting negotiations. What's the timeline on that? And I'm fishing for catalysts, by the way, so I'm going to get to that as well. Like,
Yeah. Well, there's lots of catalysts. Kick off the grade control program, kick off the geotech. We've got the First Nations agreements over areas outside of the main project area that we're hopeful finalizing in the next few months. We've got EPC submissions for the fixed price contracts to build it, and they're likely going to be three for the three components. We've got several bidders for each of the components, starting with the process piece, which is the biggest piece, the power line piece, and then the early works and site preparation works contract. But those three together would represent plus 60% of the total capex, all which are designed, and we're aiming to have fixed under a fixed price contract. So we expect to get those submissions in the form of a guaranteed maximum price over the next couple of months. You'll hear more about that. And then, of course, we're going to kick off an early works permitting process, which we hope to submit later next month. And then, fingers crossed, we'll get those early works permits from the BC government in Q1 of next year. We've got project financing. We expect to get credit approved term sheets by Q1 of next year for the debt component. So we are pregnant with
Yeah, I was going to say, this sounds very familiar. So I'm having a bit of a deja vu moment, because it sounds like you told me this exactly roughly 3 years ago when you were going through the process with Atlantic Gold. Might have been 4 years. So yep. It sounds like almost exactly the same. I think we were sitting in Beaver Creek at one of those small round conference tables. You were running me through this. It sounds exactly the same. Like, what's different now to Atlantic, besides the region, obviously?
Scale, obviously. Much bigger scale, as I mentioned earlier, and then other smaller things, like instead of just being the one EPC contract, as I mentioned, we're going to have three separate components of the capital build that will be most likely under a fixed price EPC contract. But otherwise, it's a very similar straight line.
Yeah, fantastic. And the reason why I was fishing actually for the catalyst is also one of your presentation slides, or almost 2 out of the 12 slides, are dedicated to the PNAV and ounce value, enterprise value. And of course, you're trailing your peers there a little bit. So I was trying to fish for some comments in regard to how you're planning to close that gap.
Yeah. Well, you remember, and the next slide deck that you'll see from us, which is probably going to come out tomorrow or the next day, will show an interesting graph of the de-risking events, milestones in the Atlantic timeline, and at each point, that discount that was attributed to a development property were ticked off, and we had the appreciation at each milestone. And I think you'll see something similar happen with Artemis.
Fantastic. Let's we haven't touched on the PFS real quick. Let's spend the last, we got about 3 minutes left. So let's talk about the PFS real quick. And I do have one last question I need to ask you as well. So let's talk about PFS parameters and maybe some levers you can pull. Everybody can read up, obviously, the details in the press release, but the key highlights.
Yeah. Well, the key was to take advantage of this high grade starter pit, which matching that scale of optimal mining of that starter pit. And when I say starter, it's going to be 5.5 million tons of ore annually for the first 5 years. That is a large mine in anyone's book. It's not a mega mine like it will be ultimately when it's fully expanded. But 5.5 million tons per annum, low strip ratio, 1.5 grams for the first 7 years of operation, sub 1.8 strip ratio, really good metallurgy. All those things combined with the lower capex of around $600 million generates an IRR of 50% after tax, 50, a payback of 2 years, and an NPV of 2.2 billion Canadian dollars, which is about, by the way, somewhere between $15 and $20 a share based on our current shares on issue.
That's insane. Yeah, those numbers are crazy. And the only thing that sort of, I'm German. I always look for the negatives, right? So don't get me wrong. And I always try to poke holes in stories. Is the metallurgy on silver, and the recovery on silver is the only thing that sort of stuck out at 65%. What are some other levers you can pull, or is is there anything that gives you sleepless nights?
No. The metallurgical test work is really first class, and that's one of the benefits that was a 2-year program that Newgold undertook, and we're now the beneficiary of. We're tacking some additional test works onto that. But and bear in mind the silver whilst it's not insignificant, 38 million ounces of production, it's not the biggest economic driver.
That's what I said. Is like I'm fishing, right? Like I couldn't find many negatives. That's why I'm grasping for straws here.
No, the ore body is so robust. It's so well built, so well drilled, I should say. The CV of the Tukwa deposit in Atlantic was, I think, north of 11, whereas the CV is sub 4 on this deposit. This is an epithermal deposit. It's just essentially a big blob of gold that is laid out, and we're just about optimizing how we go about mining it. There's some upside, Kai, in terms of potential throughput and hardness or softness, in fact, in the early years. So I sleep pretty well.
That's good to see. You look pretty relaxed. So I have one last question, and it's more of a CSR question because you're the chairman and CEO. So now you're running a $600 million company, a little right around $600 million in market cap. Is there anything? Are you going to step down as chairman or assign somebody else?
No, I don't have any plans. There's lots of ways to manage CSR and corporate governance, and we've always done that, I think, at a first-class level. Remember, my background is the big end of town. I was president of a company called Teck Cominco, the largest diversified mining company in Canada. So I'm well versed with that. The corporate governance is really important to us. We have a lead director. His name is David Black. He's a founding partner of one of the larger law firms here in Vancouver, and he takes over the chair whenever there's a conflict of issue of interest, which happens very seldom because most of the alignment comes from the fact that we're like everybody else, we're shareholders, and we're thinking about being a shareholder in the interest of shareholders.
No, fantastic. Sorry, I just came across that, and it's usually ISS and Glass Lewis. They always have, if they have one negative to point out, and again, they must be German as well. They pick on something like that where the chairman and the CEO are the same position, right? So just because of conflict of interest.
Yeah, but typically that's not, it's not unusual for the chairman and CEO to be combined, particularly in companies where the management and board ownership is as high as we have.
No, fantastic, Stephen. I think we're out of time. I really appreciate you joining us, running us through some background information, and we should do this again in a few months when you have some more results from the geotechnical drilling and have refined the EPCM part. I'd love to get you back on and to talk about financing and financing models as well and dive a little deeper. Really appreciate your time, and stay safe.
Thanks, Kai.